Welcome. Mark Patterson writes in U.S. News and World Report, unless retirement is forced on you by bad health or employer downsizing, which isn't uncommon these days, you should be able to financially assess your retirement readiness. If you've got a pension, that's pretty easy. If you don't, you have to plan a little bit more delicately. My guest is the author of this article, Mark Patterson. Mark is an engineer, a patent attorney, a baby boomer. He's author of The Fail-Safe Retirement System. He also blogs on matters of personal finance and retirement planning at Tough Money Love and Go to Retirement. Mark, welcome. You seem pretty busy.
Well, thank you. I am busy these days, but it's my 60th birthday today as well, so I plan on taking a little easy later on.
Your 60th birthday today. Well, happy birthday.
Well, thank you.
You sound like you're about 22.
Well, I wish I felt that way, but thank you.
Well, let's talk about the article, and you bring up 5 really good points here, and I want to begin at the beginning with sources of guaranteed income, or when you're at the end of funding your retirement. Now it's time to start paying yourself a little bit.
That's right, and I think most people understand that Social Security is a source of guaranteed income, and in some cases, for example, a public sector pension may fall in that category. But if your pension income or Social Security income is not sufficient to meet your basic retirement needs, you need to generate some other sources of that, and that may not be in the stock market, which we know is not going to guarantee you necessarily any income.
And so you're talking about some risk-free investments, or at least somewhat risk-free investments. Right.
One of the investments that I write a lot about in that category are inflation-protected securities, TIPS and I-bonds, that the U.S. Treasury issues. They don't yield much right now, but if inflation hits down the road, as some expected, this can be a good source of that guaranteed retirement income, because you can always count on it getting relatively close to the level of inflation as you get older.
And then those that have a low downside, like annuities, are applicable too, along with Social Security and things like that.
I would say so. I would put an annuity from a top-graded company in that category, although again I would closely look at whether you should have that annuity adjusted for inflation.
You talk about retirement planning. Talk about the difference between talking to somebody like you as a retirement planner as talking about this topic with a financial planner, because they're different, right?
Well, of course, I'm a self-educated retirement planner. I do my own planning, and based on a lot of reading and learning that I've done and investing that I've done. Some financial planners are primarily there to sell you products, and others are not, or maybe fee-based financial planners, but they may be more tuned into the traditional investing recommendations, where they may not be separating sources of guaranteed income from those kinds of investments, from investments that are more traditionally in the stock market, which carry a lot of risk and therefore no guarantees.
And let's talk about two major areas of importance here. One would be some health care coverage, because apparently a lot of people, when you think about retirement, health care coverage is the last thing you think about. But because you're going to get Medicare, but there's a lot of things that Medicare doesn't cover.
Well, that's true. There's 2 aspects of that. One is that some folks are zoned in on this age 62, which is the first year of eligibility for Social Security, and they jump at the opportunity to say, quote, I'm retired now, I'm 62, I'm going to take my Social Security, and they probably know, but don't think enough about the fact that they may not have adequate health insurance coverage for those 3 years between Social Security eligibility and Medicare social eligibility. Plus, as you say, Medicare does not cover 100% of everything. You're going to pay a premium for that. You've got deductibles and co-pays, and then supplemental coverage as well. And plus the long-term care issue is part of that, and a lot of folks don't really think much about that either.
Well, I think everybody these days is trying to not think about anything that involves money and planning, because it seems like the landscape is so uncertain at the moment. But things are getting better. You talk about two things too, which is of course the retirement income distribution plan, which is intuitive, but also an emergency fund and a backup plan. Nobody, I don't think, really considers that immediately when they're talking about retirement.
Well, I agree. I mean, if you look at, well, how much do I need to spend each month to to put a roof over my head and pay for my car and my food and so forth, and I'm looking at my pension income and my Social Security income, and I can meet that, but they don't think about, oh, well, how am I going to replace that car? What if I need a new roof? Or what if I sustain some damage to my home and I need to buy some new appliances? These are lump sum. They're extraordinary, but they're expected, and so you need to have money set aside that you can use for that purpose, in addition to this guaranteed monthly income that I think you need to have. And so you've got to look at that separately about funding those periodic but expected extraordinary expenses.
And then as you talk about finally this backup plan in the event, for example, you had a nice 401k and you were getting ready to retire, then about 2007 everything kind of hit the fan. How do you plan for something like that?
Well, I'm a believer in looking at the worst case scenario, a reasonably worst case scenario, and be prepared for it. That part of that, of course, is what if I can't? If I'm planning on, say, working part time when I retire, what if I can't? What if I get I'm laid off, or what if I get injured? Then do I have enough income coming in to take care of my basic retirement needs? And if I don't, then I don't have a backup plan, and I better work a little longer or reallocate some of my savings or investments to do that. And part of that also is what happens if inflation goes crazy. Do I have a plan for that? Do I have inflation-protected assets in my retirement portfolio that can handle that contingency? Or what happens if I become so disabled that I require assistance either in the home or in a nursing home? What's going to take care of that? And that's where either I need long-term care insurance or I need enough money set aside to cover those possible expenses, at least for a couple of years. And, your retirement can be a lot less, a lot more contented if you know that you have these contingency plans in place for some of these worst-case scenario events.
My guest is Mark Patterson. We're discussing his article, A Retirement Readiness Financial Checklist, written for U.S. News and World Report. Once again, the background on Mark is he's pretty busy. He's in Nashville. He's an engineer. He's a patent attorney. He's a baby boomer. He's turning 60 on the day of this podcast, and he's author of The Fail-Safe Retirement System. He also blogs at Tough Money Love and Go to Retirement. Mark, a pleasure. Thanks for sharing your time with us.
Well, Scott, it's been a pleasure for me as well, and I enjoyed talking with you, and I hope your listeners benefit in some way from what I've had to say.
Thanks for watching.